Welcome and good to see all of you. If you are not here live on the Zoom chat, it's okay. You can catch this again on YouTube. If you have any questions, please do put it into the chat itself, and I'll answer it at the end of the session. And if you are watching this on YouTube, of course, you can always leave your questions in the comments, and I will answer them. Right. So we have learning session 29. This is October 18th. The markets have been doing quite well, right? From September 24th, we've been going up, 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 up. We've reached back to 12,000, which is a really amazing journey. And this is what our current short-term cash positions look like, because the last 2-3 days as I've been telling, we've been facing a lot of resistance at 12,000, and it's going to be a bit of consolidation, especially because the US elections are also due in the next 2.5, 3 weeks. And so you will notice that I booked out a lot of these shares, but look at the return, almost 11% plus, which is huge. And this is just in the last. Some of these shares I've been holding for a while, but many of these shares I entered or started entering around September 24th, 25th. That was when the bounce. So you can see how it's so important to pick it at the bounce. HDFC Bank, Hero Motors, Hindustan Lever, then which one? Bata India, Asian Paints, Apollo Hospital, ACC. Apollo Hospital actually had it before, but Kotak, L&T. So a lot of these shares we picked it up at the bounce. Sun Pharma, Tata Chemicals, TCS, Tata Elxsi, Aruti. Huge chunk of these shares were bought when we had the bounce. And now that we are at we're facing resistance, it's good to exit with good profits. Okay. Some of these have made some excellent profits. Look at TCS, 2,300, somewhere in that range. I bought it, sold, exited out at 2,790 or 2,800. Huge profit there. And I think HDFC Bank was, I think, one of my favorites. I'm still holding ACC. ACC's results are coming out this week. HDFC Bank's results came out on Saturday. So some of these stocks probably might go down a bit also. To answer that question that I asked at the end of on Friday, when results are good, why is it that the share price goes down? When results are bad, why is it that share price is going up? The answer is simply because the market is irrational. There is a lot of people who book profits when they realize the results are good, so a lot of people might be buying. And I bought this a long time back. I can sell it off now, and I get a good price for it. Other people look at it the other way. They say, the price, the results are good, and the price can go up even further, so I should get it. You have both these, buyers and sellers sentiments intersecting. Whichever comes out stronger, the price will move accordingly. And oftentimes, sometimes the weirdest reactions happen. A good result and the prices go down. I've seen that in Aura Pharma. A bad result and the prices shoot up. I've seen that in so many banks, so many other shares. So it's the market sometimes can be irrational. Okay, so that's something we've got to be careful of. So we book out when we get good profits. Okay, I think in my position wise, Tata Chemicals is still open, and that's something that I'm still holding on to as of now, as well as Asian Paints and ACCs. Those are three shares that I'm still holding on quite well in the F&O side also. Most of the others I've booked out profits, just keeping hedges open. All right. Now, if you look at the Nifty, September 24th is when we bounced 10,780. We are on 11,762 as of Friday, but we actually touched 12,000 three times. Okay, three times on Thursday, on Monday, and on Tuesday. So 3 days in the last week, we touched 12,000. We tested 12,000. Thursday was an amazing day. 12,025. Then it went to 11,660, and then it bounced back a little bit, and on Friday it closed as 11,760. It almost tested 11,800. So there's a lot of volatility in the market. You can see this volatility in almost every market right now, the US market especially. And so I think that's simply because we have a lot of people waiting for the results in the US elections to come out and then decide on a move. Okay. So the Nifty increased by about 9% so far, and since that bounce. And right now my F&O position is at about 7.12%. It has the potential to reach 15% at the end of this month. Give you a quick glance of that as well. 49 lakhs invested, about 3.5 lakhs so far as a return, roughly 7%. Now, out of these shares, most of the long positions I've closed already. I do have long position in ACC, Sunliver, ITC, the chemicals, and motors. I might enter again depending on some of these shares. I couldn't enter into Lupin, but that's fine. So a lot of these shares, we're going to see a bit of a consolidation here and there. So they might not move so much. And I have my hedges in place anyway for almost all those. The ones that are bolded are the ones that I've exited. The others are the ones that I'm still holding. And if the same underlying share prices remain the same, this is probably what I look at the end of the month. 7.5 lakhs returns. That's 15%. Very good return. Look at the market. If it's at 9%, 15% is outperforming the market as well. Okay, so the market outlook. Last Friday, this Friday, the last Friday before this, we were at 11,938, and I was telling, the next week we're going to test 12,000. Whether we cross it, it depends. We didn't cross it significantly. We touched it 3 times, and then we, kind of came down again. 11,938 was where we closed Friday before, and 11,760 is where we closed this Friday. And you can see these candles here tell you the entire story. There's 3 times we touched 12,000, and then it's been bounce, bounce, bounce. And so you can see a lot of consolidation there. And I think that's the trend that we're going to see in the at least till November 3rd or so. A lot of consolidation. So is it bearish? No, I don't think so. I think our market is quite healthy, but consolidation is also good. You have a lot of gap ups in between, so filling up those spaces would be nice. Okay. But I don't see a significant move up unless we can break 12,000 significantly. Same thing in the Bank Nifty. The Bank Nifty came from 20,400. Friday before it was 23,000 or almost 24,000, and then we couldn't clear 24,000. We kind of rebounded from there, and today we are at about 23,640. That's the story for the banks and the overall Nifty. The Bank Nifty, again, the moratorium case is postponed to beyond the election. So there's 2 events, okay, November 3rd and November 4th or 5th. And there's 2 things that now the Indian market is waiting for. And the moratorium case, I think most likely, and looking at how the banks have been moving, very likely they're expecting a good favorable result for the banks. But again, there's a bit of suspense. We don't know what the result is until the verdict comes out. We're not sure. So that's the uncertainty in the bank and the Bank Nifty. So the Bank Nifty has been showing a little bit of weakness now again after making this price. So that's what the outlook is. Basically, the next 1 week, I think we can look at a range somewhere between 11,600 to about 12,000, maybe 12,050. If we can break 12,000, well, then that would be good. I don't know if we're going to break it. We might test it, definitely test it, hopefully test it. But breaking, different story. I think again, a lot of the the markets, global markets, are also showing a little bit of weakness, a little bit of profit booking, a little bit of uncertainty, a lot of volatility. So I'm not sure we will see a huge uptick in this week at least. It might be possible, but the probabilities are low. And so I think we just watch and wait, consolidate. Does this mean that no shares will move? That's not what it is. It means that the market as a whole will probably be in a range without breaking either way. Okay, so that's my thoughts on as to what the outlook for the week is. There will definitely be some shares that are going to move either way. Okay, we have already seen that some shares have moved significantly on Friday. Some shares didn't go down as bad on Thursday. Tata Chemicals is a good example that I'm holding. I bought it at 286. On Thursday, it hit 322, 325, and then it went down to 315, and then it went back up to 320 on Friday. So some shares have just been holding steady. ACC is a very good example. ACC on Thursday, it went to 1,060. Then it came down to 5,515, 520. Then it again went back to 1,560 on Friday. So it was holding quite well. So some shares will move. We got to catch the trend accordingly. But I think for a lot of shares they're overbought and it's safe not to get in them immediately. A lot of shares are actually come down quite a bit in this last 1 week. We should probably look at when we see a bounce. Probably pick those up. So that's my thought for the entire market outlook for the week. Stocks of the week, I had two. Okay, one is ACC. Like I said, ACC has been testing this 1,565 range for the last few days. That's the high since that's the high since February when in the pandemic when the fall came. And so if it breaks out from there, it could possibly go test 1,600. But the problem here now is ACC's results are coming out, I think, on Monday. And so there's a bit of a dynamic there also, good results going to go down, we don't know. And all the Siemens stocks have been doing quite well in this last 1 or 2 weeks. So ACC, I picked up 1,330. Now it's 1,561, almost 17.4 return on that share alone. Huge. The other one I want to highlight is Tata Chemicals. Tata Chemicals, I picked it up at about 286. But since then it's hit here. So my expectation was 320. Okay, 320 was the previous resistance area, and so I and that's where you can see it's been a bit stuck there. It's fine if it goes up a bit more, but I would probably exit it if it breaks down below this 314, 315 mark. But I keep it. So that's my trailing stop loss now. Even if that hits, that's 30 rupees or almost. Over 10%, but right now almost 12% return on that share. So that's another one that I really like doing well. And you can see that you have to pick it up on the bounce. That's the easier way to do this. Okay, you got to be patient, but that's easier way to do it. Okay, so some questions people had asking: is there a strategy that will always work? I want you to know there is no strategy that will always work. Uh, Everything is dynamic. I've fine-tuned my strategy from time to time, just because of the market tendencies, and I realize sometimes what worked in, say for example, what worked in September could not probably work in October. I'll give you a very good example. Okay, in September I had to hedge like crazy because the market was going down, and somehow I had to hedge to protect my investments, and I was able to protect it to a large extent. So that outlook I brought into October, where I hedged, but I was hedging with I was hedging excessively again. But the problem was, for example, HDFC Bank. I bought it at 10,030, 33, and then I hedged at 11,000. Sorry, 1,120. I wasn't expecting it to go above 1,120 because that was the previous high. So I hedged it at 1,120, 1,160, 1,200, 1,240. Those were 4 hedges, and it broke through literally. Sorry, 1,220. So it was 1,100, 1,140, 1,180, and 1,220 were the hedges. It broke through all of them, and so I had to adjust my hedges as it went along. So that can happen sometimes. Okay, so I want you to know the strategy won't work always. So there will be times when the market is range bound. You need a strategy for that. There are times when the market is looking bearish. You need a different strategy for that. When the market is looking very bullish, you need a different strategy for that. So the strategy changes from time to time. So there's no one single strategy that will always work. If you're asking about technical indicators, yes, I prefer MACD, EMA, and stochastic working together. That works for me. But again, hedging strategies are no perfect. So again, something else that people should understand: there's no perfect entry, there's no perfect exit. Now, I said, oh, I picked HDFC Bank at the bottom. That was very lucky, to be honest. That was really, you don't get that all the time. And then look at the exit. 1,235, I think, is where HDFC Bank went to. I didn't exit at that time. I exited at 1,216. So again, sometimes it doesn't work that way. Okay. So that's something that you need to keep an eye out on. There's no strategy that will always work, and you need to keep fine-tuning your strategies from time to time. Second question, what's the impact of the second wave of COVID? Okay, so in Europe especially, there's been a lot more restrictions because of the second wave. For us personally, I don't think the markets are going to crash like they did in Feb, if that's the question. Okay, I don't expect such crashing. But I expect, see, when the news came out that that the French Prime Minister had said that we're going to put more restrictions in place, along with some challenges on the U.S. side, the markets crashed on Thursday. So obviously there'll be short-term crash, not crashes, but corrections and profit booking, massive profit booking when such news has come out. But I don't think we're going to go back to 7,500 or even 9,000 or 10,000. uh, we're going to be in a bit of a range, and you can expect this in the global markets as a whole also. So second wave, yes, there is some adverse effect, but not a huge negative impact. Okay. Should we avoid short-term or swing trading this coming few weeks, not years? If the market is going to be bearish, yes. When the market is bearish, you have to be very careful on which stocks you pick. So if you see a trend reversal or a breakdown at any time, a correction coming in, first thing you got to do is book all your profits. Everything else, keep trading stop losses. If the trailing stop loss hits, it's fine. You have made a profit on it. Get out. Conserve your capital. Wait for the market to correct. Get back in. And you can actually walk. You can know when the market is rebounding back, and that's when you should get in. So oftentimes, mistakes most retail investors make. They enter wrongly. They enter at the highs. They don't put stop losses. They don't average when it comes down. They shouldn't have entered high first of all. They don't put their stop losses, and they don't, because they bought it at a high. Now they're afraid they don't get in at the lows. And I've faced that challenge myself too. There was a time in July when I bought things at a high. The market crashed quite a bit, came down quite a bit, and at the rebound, I didn't actually enter because I was not sure if the market was going to go. What the strength in the market was. Market actually went back up almost 900 points in 2-3 weeks, or 1 week, 1.5 weeks, or something like that in that time. And that's a point where I didn't enter. I was just keeping cash out. So we got to be careful of how we do this. Okay? If you enter at highs, you don't keep stop losses, then the very psychological possibility is that when it comes low and it's rebounding, you won't enter, or you don't have cash to enter because you're stuck with these shares on top. So just be careful. You learn to book profit. If you see that the share is not able to break through, it's not going up, book it out. It's okay. Try to conserve capital. Try to catch it on the rebound. I do that all the time. There are times when I've exited shares that were at a loss because I saw the trend was down. I said that I'm going to exit it out, wait for it to bounce back, and then get back in. There have been times when I've just held on to it because it's a good stock and I would look at averaging it at below prices. But the mistake that I should not make, and I have made this sometimes, is to enter at these high prices, which we should do. Okay. So should we avoid short term? No. There will be some shares that will start rebounding early, that have already started rebounding. There will be some shares that are strong during this phase that haven't gone down. You can always, look at the technical charts, make decisions, and enter. So you shouldn't avoid it. It's just that you have to be a little more careful. Okay, I hope that answered that question. Okay, so for people who are struggling in terms of the market, I always want to point out there is this KWC partnership plan where you can invest into KWC, partner with KWC, and you can see a return of 12%. And this compares very favorably to all these other ways you can invest. So that's my thought there. Any questions? I can answer them on the chat. I believe there are a few questions already. So let me just take a quick look at them. If you have any questions going forward, please do not hesitate. Okay, please do message me, WhatsApp me at this number, and I would love to help you guys out.